Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. Well, the Finance Minister Nirmala Sitharaman has launched the NPS Vatsalya scheme on September 18. And this initiative was already introduced in the budget of 2024. It now aims to financially secure children's future by encouraging their guardians to invest in pension accounts on their behalf. Now, what exactly is this National Pension System Vatsalya Yojana all about? Who can really open an NPS Vatsalya account? What are the kind of returns and the growth potential that you can expect here? What is the minimum investment that you need to start off with? And is it really a great investment opportunity there for parents in case you're looking to secure your children's future? Well, all of these questions is something that we will look forward to addressing in this special edition. Joining in on this show with me is Tina Jain Kaushal, the editor of Money Today, Business Today. Warm welcome to you, Tina, and good to have you with us. Well, this is a new system and a new pension scheme that's been announced, and it's also interestingly for children. Whenever we hear about pension, we always have this thought in mind that it's for our retirement, but you can actually start off by planning for your children's retirement with this new scheme right from the day that they are born.
Right, Sakshi, very well said that this is the scheme from which you can plan for the retirement of your children. No scheme is giving this option where you can plan for the retirement. For example, PPF is there for the minor children, but then it gets maturity after 15 years. So here the maturity comes after your child turns 60. So right now, if a person below 18 years want to invest in NPS Vatsalya, it is done through parents or guardian. They have to continue this scheme till the child turns 18, and when the child becomes 18, he has the option to transition it to full NPS, and then it continues for the child till he or she turns 60, and then it gets then the whole sum is not paid even at the 60. The beauty of NPS is it's always focused on pension. So your child will get pension if the corpus at that time is more than 2.5 lakh, then the lump sum is paid 20% and 80% is converted into pension for your child. So this is how this product is structured, and it's beautiful if you want to plan for retirement. But having said that, we have so many other goals already lined up. We have education, we have home loan, we already paying. So you have to see that you have that surplus amount of money or not to invest for your child. Or one easy way is, Sakshi, if I want to make my child understand the power of compounding. So what I can do is I can invest whatever cash gift I am getting on festivals or on birthday of my child. I can invest those cash gift in NPS every year, because the minimum amount contribution required is only 1,000 per annual amount per year is required. Correct. So I can invest whatever gift he or she is getting, and when the child gets his first salary, he can or she can see what the power of compounding is. So that way you can prepare your child ground running when he or she turns 18 and prepares for the prepares earning. So he or she can immediately start investing for the pension.
Absolutely. So this is definitely an interesting one right there. Of course, we will be getting to know in our discussion today whether there are other better alternatives or not. First thing you've clarified is that people who have surplus funds, those who have already probably planned for your child's education, for their marriage and for the other financial goals in life, and you still have surplus funds, then you could also look at an opportunity where you can invest for your child's retirement plans as well, because this is a very long-term compounding wealth creation opportunity that you have in the country now. Now, tell us, break this down a little. You did say that minimum requirement is just 1,000 rupee annually. That means I can just start with 1,000 rupees per year till the time the child turns 18. This fund will continue to get compounded. But where exactly does this fund get invested is the main question, because when we talk about mutual funds, there is an opportunity to invest in equities, which we always talk on our channel all about, that how equities are a great asset class and how they actually offer much better return opportunities than other asset classes. So within this NPS Vatsalya, when we invest that 1000 rupee minimum per year, where does that money go?
So you have two options under NPS. One is auto choice and second is active choice. So active choice allows you to invest in equities up to 75% till 50 years of age. And auto choice again has three options. It gives you three life cycle funds. One is aggressive, one is moderate, and third is conservative. So in active choice, in aggressive, you get equity exposure up to 75%. Moderate equity exposure is up to 50, but here the catch is it is up till 35 years of age. In active, I was saying it was till 50 years of age. And conservative, you have the name suggests that you have very conservative approach towards equity. So these are the two options which is available under NPS. But here the third option is if you don't choose what where you want to invest. So this option, this scheme gives you the default option also. So in this case, your moderate life cycle fund will be selected, where you will get up to 50% equity exposure up till 35 years of age. So these are the three choices, but again your equity exposure here will be limited maximum to 75%.
Okay.
And depends on the type of fund that you choose.
Okay, interesting. So 75% of the equity potential we have when you're investing in this. So I'll just give a brief to all our viewers in case you are actually interested in opening an NPS Vatsalya account for your children. Then all you need to do is you need to visit enps.nsdl.com. You need to go to NPS Vatsalya minus registration, click on the register now option and fill up all the details. And this is also applicable for NRI subscribers as well. So that's also another positive. What are the documents that you will need when you're opening this account? Well, you will need the date of birth for the proof of minor, your own signature as the guardian signature, scan copy for passports in case you are NRIs as well, and scan copy of banking proof for both NRIs and OCI candidates as well. So remember, this account can be opened for minor children, which means from 0 age to 17 age when your children are, you can open this account. And of course, it gets matured once your child turns 18, and then there is the option, like Tina pointed out, that the child can continue to invest in the NPS tier 1 account. It will get switched into a normal NPS account, which can then continue till 60 years of age, and of course all the parameters where you can see how much equity exposure do you really need according to your own risk appetite and what you really have as your goals as well. Now Tina, help us understand. We understand this seems attractive. What is the kind of return that one can expect here on because there is a 75% kind of an equity, and then there is an option for lowering it as well, or maybe the maximum is 75%. So what is the kind of return one can expect here?
So Sakshi, I have done some calculations. So here in NPS Vatsalya, it's fair to assume the return of 12% if you are having like 75 to 50% at least exposure in equities. So you can expect something around 12%, and I'm assuming that you are investing maximum amount in equities. If you go for government bonds fully in active choice, of course your return will be less, between 7 to 8%, and corporate it can be slightly higher than the government bond. So assuming that in NPS Vatsalya you get 12%, and in MF I am assuming, because it invests the entire amount in equities, and we have seen that equities tend to give higher return over the long term. So in equities we can assume calculation between the range of 12 to 15. Here I have picked 15% as a mutual fund assumption, and then there is PPF, which we know is giving 7.5%. So assuming that if I invest 10,000 per month for my child, then in 18 years that 10,000 per month can convert to 75 lakh if I in NPS Vatsalya. In PPF, this amount converts to 45 lakh, and in mutual fund, where I have assumed 15%, it will be much higher. It will be at 1.1 crore. So that is the power of equities in the long run. The only drawback here, I say, because we say that equities are very good long term investment. So in NPS I am not getting that option of remains 100% invested in equities, which other options like mutual fund is giving me, and PPF is altogether another ball game, because here it attracts only fixed income, fixed return investors, which is around 7.5. So that is the kind of return you will get in NPS, MF and PPF, and you have to select what you are more comfortable with.
Okay, got it. So you really have to see your own risk appetite. The calculations are there in front of you. We've taken 5,000 per month in case you're investing. Of course, 1,000 annually is the minimum, but you can go much higher, because annually you will put maybe 1,000 rupees. It will turn out to be a very small sum in just lakhs at the age of 18. So 5,000 per month if you do, then under the Vatsalya Yojana you can get 37 lakhs at the age of 18. Then 10,000 per month if you're investing, then 75 lakhs it turns into when you your child turns 18, and 50,000 per month will also turn into 3.7 crores at the time when your child turns 18. But when you compare it with mutual funds, and if you still believe that your child because of the age factor has much more risk appetite to go for equities and will be needing this capital only once the child matures to pay for his own education, then mutual funds is definitely being seen as the brighter one right here. But of course it depends on your risk appetite and how you really look into it as an opportunity for investment. Thanks a lot, Tina, for giving us all of those details. Well, we will wrap it up at that, but I hope this got you some clarity on to what exactly NPS Vatsalya is, how do you really go about it, and what kind of returns can you expect here. Do mention in the comment section in case you still have any questions. We'll be happy to answer all of those questions and maybe get a part 2 in case there are too many questions around this as well. Many thanks for joining in onto this special edition.
Well, the small commercial vehicle market in India is of course at its peak, and of course especially the below 3.5 tonnage is what the whole demand is going on. And we've always heard the stories about companies launching commercial vehicles, the rationale behind it, but the real story of how